And welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I'm going to give a portfolio update, meaning that I'm going to share which companies which I have been purchasing within this week, and then I'm going to answer a really interesting question which I have received from the audience, since one of my viewers has asked how I determine which companies that I want to look closer at, meaning how do I actually start my initial research process. And finally, I'm going to comment on a news article from the Danish FSA, where they are warning private investors about following advices from online free forums or YouTube channels just like this. So let's start with the portfolio update. So the first thing we noticed for this week's episode is that there's a green circle, meaning that the portfolio is up in value compared to last week. And if you take a look at the cost and take a look at the value here, you can see that the cost has increased quite significantly since last week, and that there is no longer any cash, meaning that I have actually spent all the cash which I had. And if we take a look at the portfolio value, you can see that the cost of the portfolio has increased with $2,700 in roughly numbers, and that the value of the portfolio has actually increased by $4,000. And just to clarify here, the reason why you see a cost field here and a cost field here which is lower is the top one here is the cost of the amount of dollars invested, so 120,000 and $100. And the reason why it is lower here is due to the fact that I have subtracted all the gains from the companies which I have sold out of. So if you go to the history tab here, then you can see that I have bought some companies and I have sold them. Some of them I have had gains on, some of them I have had losses on. And in total, my gains has been a little more than 4,000. Hence, I have deducted that from my cost. So that is why when you go to the portfolio values tab, that I'm using the lower cost number, since I think that gives a better representation of this portfolio's performance. If we then go back to the overview arc here, and if we scroll up a bit and zoom in just to make it even more clear, then you can see that I have added shares into Unum Group. And for those of you who has followed this channel, you might recognize that this was a company which I have previously held. I had around 133 shares previously, so I have decided to up my numbers of shares in this company. So I bought 200 shares for the price of $5,507. Since I still believe that the company is undervalued. They were extremely undervalued the first time I bought them, where I actually bought them at a price below $20. And the second share which I have decided to add is another one which you might recognize, since it is Abbvie. I previously had around 109 shares, and now I have bought 130 shares. I was a bit more lucky with Abbvie, since they have actually decreased a little in value compared to the price for where I'm actually sold them. So now I'm happy to own them on this new broker. Of course, still on a much higher price than my initial investment, since my initial investment was in the 80 range. So in total, I have invested a little more than $19,000 within this week. If we then scroll a bit to the side here, just to take a closer look at the dividend yield, then you can see that I get a little more than 4% in dividend yield from Unum and close to 5% in dividend yield from Abbvie, meaning that I have actually added close to $900, or it's actually a little above $900 before withholding tax. And that actually leads me to my favorites tab, namely the dividends tab. So if we go and take a closer look at that, I just have to zoom out here, otherwise you cannot see all of it. If we then start by going to the side, you can see I have not received any dividends within this week. But if we go to the estimated yearly income, you can see that I'm actually getting fairly close to the $3,600 mark, which I hope to achieve within this year, because that gives me an average of $300 per month. And I feel fairly certain now that I will actually hit that goal within this year. But that's also due to the fact that I have added much more than $1,000 on average every single month. And if you look at the estimated yield here, you can see that the average for the portfolio is now 3%, So I'm really happy to see this as well. If we then turn to questions from the audience, then I have received a question that goes like this. I've been thinking about this for a while now. How do you decide upon which industry/company to invest in? I know you have the guidelines, yes, but where so you start and funnel down? US companies, yes. Dividends, yes. But from there on, why pharma over banking? Why Lockheed Martin? Where does these thoughts start before applying the guidelines? Because I don't assume you evaluate all companies in the world with the guidelines and go from there. So first of all, thank you very much for this excellent question. And I mean, it really makes sense for me to try and answer a question of this sort now, since I have previously been showing how to make a budget, which is really the foundation. So you make sure that you actually have a constant cash flow that you can invest. And then I showed my guidelines, meaning what I actually do when I need to go a little bit more into detail with companies. But what do I do before I actually get to the guidelines? So this really actually pictures out what I was missing to present on this channel. So let me start from scratch with what I actually did when I founded this channel. Because there I started by trading on Revolut, and that limited me to around 600 different stocks to choose from. And I know that 600 sounds like a lot, but if you can determine within 10 seconds whether or not you actually want to look closer at a company, then you can actually look through a lot quite quickly. But of course, as time passes and I'm trying to broaden my horizon even more, since I'm now using a new broker, this would not be a very smart way to do. So obviously I need to find some sort of a screener I can use to determine whether or not I actually want to look closer at a company. So initially I tried to search for some kind of screening tool, and then I found the Dividend Kings list, meaning US companies which have been paying out an increasing dividend for the last 50 years. And then from there on you could go down to the dividend aristocrats, meaning dividend payers where they have increased the dividend for at least 25 consecutive years. And then you can continue from there and go down to the contender list, meaning those who have been paying out an increasing dividend for 10 years and all the way up to 25 years, because there you would already have narrowed down the amount of companies which you need to look closer at. So let me start by sharing this quite useful webpage. I will of course leave a link in the description below, because in here you can find the Dividend Kings list, the Dividend Aristocrats, the Dividend Champions, and the Dividend Contenders. So if you are building a dividend investing portfolio completely from scratch, this is definitely a good place to start to look for companies which you potentially want to add into your portfolio. So even though we have now narrowed down our lists by looking at the Dividend Kings and the Aristocrats, well, perhaps we still have too many companies which we can still buy. How can we narrow it down even more, or funnel it down, as the viewer called it? Well, if we go to Finviz and use their screening tool, we can see before we put in any criteria, we have close to 8,000 different stocks. So let me try and put in some parameters which I think could actually be quite useful. So for instance, we want to have a dividend yield above 2%. If we then go to fundamentals, we want to have a PE ratio under 20. We want to have a forward PE ratio under 20, a current ratio which should be above 1, meaning that we have more assets than we have liabilities. And then obviously I want to see that we have a positive earnings growth. Then I can actually limit the amount of companies down to 64 compared to 8,000. So simply just depending on how many criteria that you want to add, you can narrow it down quite a lot, and you can do so rather quickly. And since we now have 64 companies, if we for instance just go to page 2 here, then you find some familiar names here, since you are seeing General Dynamics and you are also seeing Lockheed Martin here. So these are two good examples which I was capable of finding through this screener. Of course, it's not enough just to use a screener like this, but this is how you do decide which companies that you want to take a closer look at where you could, for instance, apply the guidelines and try to get to know the company much better. If we then take a look at the next part of your question, why pharma over banking, why Lockheed Martin, then we have to go back into the overview arc and take a look at my portfolio. So when you look at the portfolio chart here, or the portfolio pie, I am trying to distribute my wealth out so that I don't, for instance, have 50% in healthcare all of a sudden. I mean, I don't mind that I have very little into energy, for instance, and have not that much in communication service, and then have a lot in healthcare and real estate. I'm simply just trying to balance out so I don't all of a sudden end up in a position where I have 50% into one sector. But at the same time, I am looking for companies which I think have an attractive price or a margin of safety when I buy them. And if that means that I will have more healthcare than I would have energy stocks, then so be it. Then that is a risk which I am personally happy to take, since if I have done my analysis correct, then I should be rewarded for that extra risk. And one of the biggest reasons for why I don't mind having more than 25% into one particular sector at the moment is that I'm still adding a lot of capital into the portfolio, so I know it's probably a temporary situation. But for instance, in 10 years time from now, then my distribution in the portfolio would most likely look very different from what it does today. It's simply a matter of where do I think I get the best bargain for my money. And as long as I keep adding capital into the portfolio, then you will see these percentages change quite a lot. So perhaps in the future, if I think that I can get energy stocks on a good discount, then you would see this part of the pie grow dramatically. Or for instance, the consumer cyclical or the consumer discretionary, which you can't even see with a percentage, since currently I only have Cardinal Corporation there, which has not been treating me nice, as you can see, since I'm down more than 40% still. So hopefully that answered your question about what I initially do when I try to figure out which companies that I want to take a closer look at. And I mean, this is just one approach with using the screener. If you, for instance, read the book called One Up on Wall Street by Peter Lynch, he is famous for his approach about using his consumer knowledge, saying, I really like this product, and chances are if I like the product, I will love the stock. So here he is using the approach of saying, for instance, if he likes Coca-Cola as a consumer, then chances are that he would love that stock. That is another way of approaching, which can be equally as beneficial, or perhaps even more, because what is the best asset you have? That is your knowledge. So try to put that into an advantage every time you can. And finally, I want to share a news article. Unfortunately, it is in Danish. I will of course include a link in the description below for those who actually read and understand Danish. But what the article says is that the Danish FSA is now warning private investors about following investing advice from online forums and from free sources just like this YouTube channel. And then it made me think, well, shouldn't you always be suspicious every time somebody is trying to give you advice regarding finances? And I mean, what I found actually quite hilarious is, well, this webpage called Your Investor, they are also freely available. So that means that I should be really cautious when I see anything on their webpage as well. And I would say, obviously, yes. That is also why I'm not telling or trying to instruct people on what to invest in on this channel, and why I take a particular pride in trying to present the data and share the links and the sources from where I have found it, just so you can go and check yourself in case you want to do so. Because I truly believe that you really need to be careful with taking any advices. You should always be suspicious. And that is why I really don't recommend anything when it comes to investing, saying you should buy this stock or you should buy this stock. This is why I'm showing what I am doing and why I'm doing what I am doing. And just to give you a good example of why you should always be suspicious about investments, I mean, try and go to YouTube and search for what stocks to buy. Look how many views these videos have. This one uploaded less than 18 hours ago and already has 33,000 views. This one a month ago and it has more than 250,000 views. So obviously this is what people would like to see, and if there are so many people who wants to see these videos, then there are definitely creators who will keep making this type of content. But I guess most of them are not explaining why you should buy a particular stock or explaining the method or the reasoning behind, so you can actually go and check out for yourself. This is why it is so crucial that you are actually knowing what it is you are doing. And if you don't want to spend the time and doing research on the individual companies, there is no shame in not being willing to do that. Then you should know that you will probably do much better by just buying an index fund. That is what the numbers suggests. So that actually sums it up for yet another exciting week of the Lazy Money Game. So hopefully you have now learned about how to start the research process of individual companies if you want to go down that road and choose the individual companies for yourself. And in case you don't want to do that and want to put your investing on autopilot, I have also made an episode about that, so please go and check that out as well. And if you would like content like this, then please consider leaving a like, adding a comment, or consider subscribing. It really helps out the channel. And until I see you next Sunday, bye!